Today we're going to dive into a document that raises a really uncomfortable question, and it's this. Did you know that for the simple convenience of ordering a ride-hailing app abroad, you could be completely voiding your corporate insurance?
Yeah, that's the core question we're digging into in this deep dive from Strategic Labs. You know, that 5 minutes you think you're saving at the airport could end up costing your company millions. And hey, if you want to explore the source material for yourself, all the original links are right there for you in the description.
All right, so let's start by unpacking this whole dilemma. It all begins with a situation that I'm sure every single business traveler will recognize, what we're calling the convenience trap.
I mean, come on, we've all been there, right? You are exhausted, you just want to get to your hotel, and that familiar app on your phone, it just feels like the fastest, easiest solution. It's a decision you make under pressure, when you're tired, but it's a decision with these massive implications that, are rarely even considered in the moment.
And that's the trap right there. The slick, standardized interface of these global apps. It creates this powerful illusion of safety and consistency. The app looks and feels the exact same in New York as it does in Nairobi, so we just assume the rules are the same. But behind that familiar screen, the reality is anything but consistent.
So let's peel back that user-friendly interface for a second and take a look at the complicated legal engine humming underneath. This is where the real risk for corporate travel is hiding.
And here is the fundamental disconnect. On one hand, you've got the marketing promise, right? One app, one global service. It's all consistent, reliable. But on the other hand, you have the actual legal reality. It's a messy patchwork of local regulations. A service that's totally compliant in one city could be operating in a legal gray area or might be completely illegal, just one city over.
And this brings us to a really crucial term, the regulatory gray zone. So many of these services just thrive in this kind of legal limbo. Now, for a tourist, this might just be a minor detail. But for a corporate traveler, operating in this gray zone means you are operating outside the protections your company's policies and insurance are built on.
So, what happens when this convenience fails? When something goes wrong in one of these legally ambiguous vehicles, the fallout? Well, it can be severe. This is the million-dollar question, and I mean that literally. When a ride is taken in a vehicle that isn't fully licensed or insured for commercial transport, the entire chain of liability just breaks down. And it starts with your corporate insurance.
Okay, look at this breakdown. It's night and day. With approved transport, your corporate insurance policy is valid, you've got a clear legal backing, and the company fulfills its duty of care. Now, with an unregulated service, that coverage is likely voided. It's gone. And just like that, the traveler and the company are directly exposed, with absolutely no institutional safety net.
And this, right here, is probably the most serious consequence for the organization. Duty of care. It isn't just some corporate buzzword. It's a real legal and ethical obligation to ensure employees' safety. So knowingly or even unknowingly allowing employees to use unauthorized services is a direct breach of that duty. And that comes with some very significant legal ramifications.
So the problem is clear, but what's the solution? It's probably not about banning apps entirely. It's really about establishing a dual responsibility, a partnership between the individual traveler who's on the ground and the organization that's providing the policy framework back home.
So the solution, it has to work on two levels. The traveler needs to be empowered to make smart, safe choices in real time. And the organization? It needs to build a system that makes those safe choices the easiest ones to make. So for the traveler, this means you've got to exercise some real diligence. First off, prioritize pre-booked or company-approved vendors, even if it takes a few extra minutes. Next, do those simple, crucial checks. Does the license plate actually match what's in the app? And finally, it means understanding the local rules before you land, not when you're tired and under pressure.
And the organization's role is to build that safety net. First, they have to have a clear destination-specific policy, not some generic one-size-fits-all document. They need to maintain and provide a list of vetted vendors. And crucially, they have to provide 24/7 support and actually train people to recognize these risks in the first place.
All of this brings us to a final and I think crucial reframing of the issue. We really need to think differently about what efficiency truly means in the world of corporate travel.
So the central conflict, it often feels like a choice, doesn't it? The fast, convenient option versus the slow, compliant one. But is that really the right way to frame it? The source material we looked at suggests it's not.
And this is the key takeaway. True efficiency isn't just about saving 5 minutes at the airport. It's about ensuring a trip is secure, compliant, and resilient from the moment you leave to the moment you get back. A journey that voids your insurance and breaches a company's duty of care is, by definition, the most inefficient trip you can possibly take, no matter how quickly the car showed up. We have reached the end of this extensive analysis. If it added value, share and subscribe to Strategic Labs. See you next time.